I think we can start now. Mr. Sajid, over to you.
Okay, thank you, Farooq, and thanks a lot, and good afternoon. My name is Sajid, and I am heading learning and development activities at National Institute of Banking. Let me first welcome you to this webinar on taming virtual assets through laws and regulations. We are grateful that you took out some time from your busy schedule for this event. As you know, that virtual assets have many potential benefits. They can make payments easier, faster, and cheaper, and provide alternate methods of those for those without access to regular financial products. At the same time, there are a number of risks associated with these assets. In this backdrop, of course, there are a number of issues that are critical for any central bank, particularly in developing countries like Pakistan. So in this webinar, we will try to cover all such issues by Nabaf and Alif technologies. Before moving to main events, let me take this opportunity and briefly introduce Nabaf to you. Nabaf is a subsidiary of the State Bank, which is the Central Bank of Pakistan. We contribute towards capacity development of financial industry in the country. We have campuses in Karachi, Lahore, Peshawar, Quetta, Muzaffarabad, and our head office is in Islamabad. State Bank and its subsidiaries are our main stakeholders, but recently we have increased our focus to commercial banks and broader financial industry. Nabaf offers trainings in various operational regulatory areas of commercial banking. In addition, we support development finance agenda of the central bank by offering trainings in agri-finance, microfinance, SME, housing, Islamic banking. We also conduct a number of international programs. Lately, with the increased focus on online connectivity and communication, it has allows us to reach to a number of organization experts across the globe who are willing to share their knowledge and experience with the local industry. This webinar is the first of the series of such efforts where we are bringing recent knowledge on fintech and related to our on fintech related issues. This knowledge we are bringing to our stakeholders in Pakistan. I hope you will all benefit from the insights and experience of our experts. And good luck. Thank you, sir. Thank you, Farooq.
Thank you so much, Mr. Sajid. I would like to now call upon Syed Asir Zaman to have some welcoming remarks, please.
Thank you much, Farooq. Dr. Farrow, thanks a lot. And today, we are conducting this webinar with the collaboration of State Bank of Pakistan. And this is a part of our e-learning series of Alif Technologies. At Alif Technologies, we are providing three main kind of articles. One is we are in educational one, which we are doing the webinars on fintech, blockchain, and these technologies, upcoming and technologies. Second thing, we are doing consulting work. We are in consulting business also, like registering crypto coins and other things, like exchange and other things. And then lastly, we are in development, and we are doing development in blockchain and especially softwares and application of DApps. And today, this is an interesting topic, which has been now that the laws and regulations on crypto assets. This is a question nowadays. That there's a boom of crypto assets, especially all the crypto assets values are going up these days. So today will be, we have a line of good speakers in which you will come to know and understand that how are the laws and regulations governing these crypto assets. And today's moderator will be Dr. Farrow. To you, Dr. Farrow.
Dr. Farrow, you're muted.
Thank you so much. Jazakumullah khairan, and thank you so much. Again, I welcome all the participants, and I really would like to thank and grateful to our respected speakers. Just to give you a brief about Alif Technologies a little bit, and then I will just move that Alif Technologies is a professional firm with regional presence and global focus and representation. And we have been conducting these webinar series which is free, of course. And these webinars are a great place to seek knowledge, listen to industry experts, scholars, and academicians, and engage in interactive discussions. So with this, we are very grateful to National Institute of Banking and Finance, which is NIBAF, and also SBP, to support us in this initiative. And with this, I would like to call upon our first speaker, who is Petri Bassin. He's an experienced professional with a background in finance and IT. After obtaining his chartered accountant qualification, he saw the disruptive potential of technology and obtained 6 certificates in IT, as well as his Certified Information System Auditor CISA qualification. He helped set up and lead the KPMG Cayman Islands Digital Assets team, and recently started his own consultancy company focused on digital assets. He serves as an independent director for a number of companies, sits on the steering committee of the Cryptocurrency Security Standard, CCSS, and the steering committee of Digital Cayman, chairs the Virtual Assets Committee, and co-chairs the Education Committee. He's currently serving as the chairman of the Blockchain Association of the Cayman Islands. And I hope that we will definitely enjoy his valuable insights and also learn from his experience. So Petri, over to you.
Well, Dr. Frederick, thank you very much for the introduction, and thank you very much for the opportunity to present. Let me just quickly share my screen, and then I can run my presentation. I don't know, can you maybe just give me the ability to share my screen quickly, please?
Mr. Asif, can you please do that?
I think he has the ability. Sharina, can you check, please? As the co-host, he can do that.
Yeah, he can share the screen. He's the co-host.
I don't get that option when I click on it. Give me 1 second. Nope, unfortunately, I only get the sharing options, but not the screen. I know you guys have my presentation, so happy for you to run through it as well.
No problem, but let me just ask Sharina, can you please look into that? Perhaps you can help him.
We have already allowed all panelists to share their screen.
Mm-hmm.
There we go.
Can you do that?
Yes, no, the option
Okay,
just
perfect.
used. So if you can just confirm if everyone can see that.
Yep, I can see that. Perfect.
Okay. Perfect. So as you said, we're talking today about the challenges in regulations and laws. So I'm just going to sort of touch very briefly on the international landscape, talk about a few regulations that have actually been implemented in other jurisdictions. And then we can talk about the challenges and potential solutions. I mean, this is a very complex issue. I think for any regulator, this is an interesting and challenging thing to look at, because it's very complex to look at all the different angles. So whenever you're talking about any virtual assets or blockchain, the one regulation that everyone is aware of and that's made a very big impact is the FATF's guidance. So in 2019, we saw the FATF guidance come out. Based off of that, we've seen a lot of different countries implement either legislation. In the Cayman Islands, we've got a brand new virtual asset service provider bill. And you've also seen quite a few countries that already had regulations out there update their regulations. So the FATF is very interesting in how they've approached it, because they're looking at the virtual asset service provider. So they're looking at the service provider and making sure the service provider specifically complies with regulations, etc. So they're not really going after the blockchain or the technology. They're looking at the service providers and making sure they comply. If we take a bit of a look at the rest of the world, we've seen some very interesting developments there as well. I'm not even going to go into all the central bank digital currencies. When I was busy doing my research, there are so many different projects. I didn't want to go through all of them. So what I'm going to touch on is just some big movements that have actually been made by regulators. The first one in the US is what happened probably around the middle of last year, where banks in the US can now offer crypto custody services. So this is very big, because in the crypto industry, custody has always been one of the challenges. There are very well-established custodians these days with SOC 1 reports, institutional level controls. But now that banks are actually allowed to also custody assets in the US, that really changes the game, because now you also solve the banking problem, because there used to be a big problem that banks didn't want to deal with digital assets. Now with banks actually custodying the assets themselves, that's very big. And I'm sure we're going to see a very big boom in the coming year, because this news broke about in the middle of 2020. So I'm sure a lot of banks have been working on this in the background. And this is going to improve the regulatory space and also just the compliance and ease of use for digital assets. The next one then is in the US as well, US federal regulators allowing banks to conduct payments using stablecoins. Now, for anyone that's not familiar with a stablecoin is pretty much just a token that's running on a blockchain, and it's backed one-to-one with an asset. So for every token that's out there, you've got $1 backing it and you can transact in it. Stablecoin has a lot of benefits in terms of the speed that it processes at, the cost. It's very efficient, and it can be used very efficiently by people. I've seen it being used for payments and cross-border payments quite often. And now that banks are actually allowed to use stable coins, we're going to see definitely a pickup in the adoption of these kinds of assets. And then the last one is just from the OCC saying that DeFi will pave the road for self-driving banks. Now, I'm not going to go into the detail of what decentralized finance is, but this is pretty much finance as we all know it, but running in a decentralized manner. Now, I'm talking about all of these things because we're going to talk about some of the challenges a little bit later on. And these are some of the challenges that we will face later on as well. If we're moving away from the US a little bit, looking more towards Asia, we've seen quite a lot of developments over there. I've just cherry-picked one or two from that side. If we're specifically looking at Hong Kong, we've seen that they've already issued their first digital asset custodian license. So in the East, you've also now got licensing for custodians. So that's a fully compliant and regulated custodian. In the same vein, you've seen Hong Kong greenlight the first virtual asset exchange. So now you've got custodians and exchanges that are fully regulated with regulatory regime that they're complying with. So even for investors, that gives them a lot of comfort. And then you've seen the same thing in Singapore, where Singapore actually had their regulatory sandbox. And now they've started issuing their licenses. And for a regulator, I think this is a very good approach because the sandbox gives you that opportunity to understand exactly how these assets work, really get comfortable with it, and then decide exactly how you're going to regulate it. So now, if we move on and we start looking at some of the challenges and some of the things that have happened in the industry, the first challenge is probably just the understanding of the technology. For regulators, when they're looking at this new technology, most of them are looking at it using a traditional viewpoint. So they're looking at assets as they've always known assets, transactions as they've always understood transactions, and they're trying to apply some of those principles on this new technology. So the first example of this is probably the FATF's travel rule. And this has caused quite a lot of issues and concerns in the industry. So for those that aren't familiar with the travel rule is pretty much when banks do transactions between each other using SWIFT or another network, there's always information that travels with that transaction. So information around the sending party, who it's going to, etc. If you're doing this on a blockchain and you're just doing a transaction between two different wallets, there isn't information that travels with it. So this has actually been a challenge for the blockchain industry because to comply with this, there's a whole new layer of technology that needs to be developed to be able to comply with the travel rule. But what we've already seen is that there are a few industry bodies that are working on this challenge. So you've seen industry coming to this and solving the problem, because regulators have said this is one of the compliance needs that you need to meet. And we've seen the Intravast messaging group, and we've seen the Travel Rule Information Sharing Alliance, and they're working on standards and applications that can actually solve these problems. So I think from the understanding part, what we're seeing is regulators really need to understand this, but where there is a gap, you're seeing industry actually coming to the table. They're starting to fix some of these challenges. They're starting to really work on them and solve them. I know one of the other things that's being discussed at the moment is in the US, there was conversations about what they called hosted wallets. So if you've got a wallet that is self-hosted, the regulations around that. And this is just a good example of where you're looking at traditional finance, where you only had bank accounts at institutions. Now you potentially have a wallet that someone can host themselves, and understanding and seeing how you can actually regulate that, get to the right level of compliance, but without actually dampening the technology and stopping the development. The next thing that's definitely one of the big challenges is the decentralized nature of blockchain versus the centralization of regulations. I think this is one of the things where it's going to be a very interesting problem for regulators to solve, because thinking about this is completely different. Traditionally, a regulator thought about their own jurisdiction, and they were solving for the problems in their own jurisdiction. Due to the nature of decentralized technologies, due to the nature of blockchains, most of these products are operating internationally. So the question really becomes, where exactly do you regulate and what do you regulate? Because regulating the protocol that is run internationally is very difficult. So you might want to start looking at regulating touch points in your country, or specific things like exchanges and custodians to actually help this. To just illustrate the problem a little bit, I had a look yesterday. So this is BitNodes. It's just a list of all the different nodes for the Bitcoin blockchain. And over here, you can see there's 11,612 different nodes running. And these nodes are right across the world. So you can see a lot of them in North America, a lot in Europe, but all throughout Asia, Australia, even down in South America and South Africa. So if you're a regulator and you're thinking about regulating an asset like this, it's very, very difficult for you to do, because you need to decide exactly where you're going to regulate this. So if I'm in the US, I can't regulate the nodes that are running in Europe, running in Asia and other places as well. So I think this is one of the big challenges for regulators, and they need to start understanding how exactly that's going to work and what's going to be the easiest way to do that. The next thing that also becomes very interesting is something that is called a decentralized autonomous organization. So a decentralized autonomous organization is a new way that blockchain companies are actually running. So what you're seeing is a lot of these companies are launching, they're putting the code out on the internet. And then what happens with these organizations is that the governance of the organization is actually run by the people who own the tokens. So the token holders can vote on governance, can vote on exactly how the technology is progressed and what changes are made. But the challenge there is you don't have beneficial owners in the traditional sense of the word. So you don't have shareholders, you don't have a specific entity controlling this organization. So for a regulator, again, this poses a very significant challenge, because there isn't one specific company that you can say you are domiciled in this jurisdiction, and these are the regulations that you have to comply with. This is why I think the FATF regulations, which are international, that all countries have to comply with, are actually good, because it gives you an international standard. Now, finding the middle ground between sufficient regulation and not holding back the technology is where the challenge comes in. And that's really what's going to be challenging for the regulators on the one side, but also for industry, because due to the nature of blockchain, they are very pro-decentralization, and they are resistant to some of the regulations sometimes. So it's going to be a very good medium. And I think the best way for this is where industry and regulators actually work together. And then just for the final slide, what I've put in here is there a solution? And I think from my side, just what I've seen in industry, what I've seen happen in the last few years, I think there definitely is a solution. If regulators and industry work together, I think they can definitely come up with the solutions. the one term that I've heard used recently is you have to have agile regulations, which I don't think that's a very familiar term because regulations are normally not very agile. But you have to have regulations that can actually adapt to this changing technology, because if your regulation is 2 years old, the technology is going to be very far ahead of that. And there's risk for the regulator and then also for the companies building that could potentially hold them back. So I think that's going to be one of the main takeaways, is this is going to be a process of working together between the regulators and industry. And examples like what we saw right in the beginning, where you've got sandboxes and other kinds of platforms where a regulator can understand it, but then the company can still operate, is really good. When we look back at the US example, where banks are now allowed to custody, over there you're going to see the institutions actually develop it at an institutional level. And that'll help with the regulators as well, because that'll help their understanding and them getting more comfortable with these assets. And then even with what the OCC talked about, where you'll potentially have banks running on decentralized finance. So the problem we talked about earlier, where these are decentralized organizations, when the banks are running on that, this will start with industry solving some of these problems, and then the regulators will be able to understand it and regulate it appropriately. So that's my very short summary, and I'll hand over back to the presenters.
Thank you so much, Patrick. It was very enlightening. Now I will move on to my second speaker, Dr. Inayat Hussain. Let me just introduce him. Dr. Inayat Hussain is the Executive Director of the Banking Supervision Group at State Bank of Pakistan, which is the Central Bank of Pakistan. At this position, he leads the Banking Supervision Group that consists of 2 banking inspection departments. One is Offsite Supervision and Enforcement Department, Financial Stability, and second one is Financial Stability Department and Banking Conduct and Consumer Protection Department. Dr. Hussain is a member of the Monetary Policy Committee, Council of Regulators and Financial Stability Executive Committee of State Bank of Pakistan. He also serves as a director on the board of Pakistan Institute of Corporate Governance and on the Council of Institute of Bankers in Pakistan. He holds a doctorate degree in economics and finance from Curtin University, Australia. He is a member of CFA Institute, a fellow member of Institute of Cost and Management Accountants in Pakistan, and the Institute of Bankers in Pakistan. He also holds FRM designation and an MBA degree in finance. So with this, he has actually more than 20 years experience in the banking industry, regulation, and supervision. So with this introduction, I would like to welcome Dr. Inayat Hussain. Dr. Inayat Hussain, over to you.
Thank you very much, Dr. Farrow, for a very kind introduction. Let me first thank the organizers, National Institute of Banking and Finance and Alif Technologies, for arranging this workshop and to provide me opportunity to share my thoughts on this very important topic. Let me start with a disclaimer, because this is a bit of sensitive topic as well, as perhaps Patrick alluded to. So whatever I say here are my thoughts, and they may not necessarily reflect the viewpoint of State Bank of Pakistan. I think this is a very important topic, and the programs like this are perhaps the only way forward. As Patrick just mentioned, that the regulators and industry will need to work together if this ecosystem needs to evolve. So let me share my presentation with you. So crypto assets, so to be or not to be. So the question is whether to regulate crypto assets or not to regulate crypto assets. So what I will try to actually do is to start with what supervision actually entails. What are the objectives of supervision? Why do we supervise? And so from that perspective, we would then see that what are the benefits of supervising crypto assets if we, for example, start supervising or regulating crypto asset industry. What would be the benefit to the crypto asset industry, and what would be the benefit to the economy? And then challenges, but from the perspective of a supervisor, that what do we see the major problems in supervising something like crypto assets, and then shortly, what are additional challenges that are faced by a developing country like us.
Excuse me, Dr. Inayat, can you please make your presentation full screen?
All right.
Thank you.
So is it now full screen?
Not yet. Yes, I can see it now. It's full screen. Thank you.
Thank you very much, Dr. Farrow. All right, so there are two dimensions to the supervision. One is the prudential supervision, and the second is conduct supervision. In some jurisdictions, there is one supervisor that is responsible both for the prudential as well as conduct supervision. In many jurisdictions where they are following a so-called twin peak approach, there are different supervisors for prudential and conduct supervision. Now, the primary objective of prudential supervision is to ensure that the industry is safe and sound, and this objective is achieved by ensuring that the weak links in the industry are timely identified, and those issues in those weak links are actually addressed. The second objective, main objective, is to ensure that the regulated entities, they are able to meet their commitments that are made to their customers. So in terms of, for example, a bank, the commitment would be to repay their deposits. In terms of an insurance company, it would be to the payment of the insurance claim, etc., etc. So how do regulators actually achieve these objectives? So they achieve this by putting in place a certain entry requirements for the entrants, like, for example, minimum capital requirements. Then they prescribe fit and proper tests for the owners of those entities and for the senior managers. There are actually comprehensive sets of prudential regulations, risk management guidelines, governance standards. There is very substantial public disclosure requirements to ensure that there is market discipline. And then, of course, there are frameworks to deal with important risks, like, for example, IT risk or cybersecurity risk, AML, CFT. And these are then complemented with reporting requirements for off-site supervision. There are on-site examinations done of the regulated institutions to ensure that all the regulations and guidelines that have been issued by the regulators, they are actually being complied by the supervised entities. Conduct supervision, the main aim is to create an environment in which consumer can make informed decision. So the primary aim is to ensure fair treatment of the customers. To achieve that, supervisors, they require that the regulated entities, they have service standards and comply with those service standards. There are rules for integrity and due care. There are disclosure requirements about the products and services that are offered by the regulated entities to ensure that the consumers of those products and services, they know that what are the features of those products and services, what are their rights and obligations, and then they are able to make an informed decision. There are strict requirements about confidentiality of the customer information that is collected by the regulated entities. And then, of course, there is a huge infrastructure to ensure there is no market abuse. And then the supervisors also ensure that there is a mechanism for customer grievance redressal, both at the regulated entity level, and then there are, of course, independent platforms. In certain jurisdictions, there are independent ombudsmen, like, for example, banking ombudsman, insurance ombudsman. In many jurisdictions, regulators themselves, they actually have this function as well. Now, of course, there are substantial benefits of regulating cryptocurrencies. To start with, once the cryptocurrencies or the crypto assets are regulated by the by supervisors, that would provide a level of legitimacy that right now is not available to the crypto assets. Crypto assets, as of now, as per my understanding, they are operating in sort of a gray area where many people are not sure, and I will actually also have a slide to sort of substantiate that. Many people are not sure that whether it is, for example, legitimate to deal in crypto assets or not. It would lead to better acceptability, and it is especially important for crypto assets like cryptocurrency. I'm sorry, the heading or the title of this slide is perhaps a bit incorrect. I should have write benefits of regulating crypto assets. But in terms of cryptocurrencies, one important function is medium of exchange. So the legitimacy that supervisory framework would provide would be to improve its acceptability by stakeholders, and thereby enrich its medium of exchange function. As of now, since this space is not regulated, there are, of course, good players, and at the same time, we all know that there are mischievous elements as well. So once countries start regulating it and regulating it in a robust way, it would be possible to get rid of those undesirable elements. And there would be improved security for holders of crypto assets. And as there is more depth in the market, the volatility that right now we see in many crypto assets would decline substantially. Like the crypto asset industry, there would be benefit to the economy as well. So the one important thing is, and that is perhaps more than benefit, rather more a justification or reason to regulate crypto asset, is that still it exists and it is not going anywhere. It is better to regulate it rather than leave it unregulated. Once we start regulating it, of course, the illegitimate use of cryptocurrencies would decline. We all know that now, for example, a few days back, there was a substantial sort of discovery whereby they found that a website that was accepting crypto assets was engaged in the sale of illegitimate goods. Transparency would improve very substantially. We would have better consumer protection. Right now, since the cyber asset industry is operating in a gray area, so of course, although many countries in the world, while they have not decided to regulate the crypto asset industry, they have rules or laws in place whereby the dealing in cryptocurrencies actually attracts at least capital gain tax, or in many cases actually value added tax as well. in addition to actually the tax collection, the crypto assets can be used for tax evasion. For example, parking your wealth in crypto assets can go undetected. As some of the presenter rightly pointed out, that the convenience and efficiency that crypto asset provide can actually be a game changer for financial inclusion. Now, the next few slides are a bit of sort of complementary to what Patry earlier mentioned, the challenges to how to regulate crypto assets. So this is a slide from a study done by Cambridge Center of Alternative Finance in 2019. It's Global Crypto Assets Regulatory Landscape. And they identified that on average, 3 distinct national bodies per jurisdiction issued official statements on cryptocurrencies. So, and in many jurisdictions, of course, as the right-hand chart shows, that in many jurisdictions, more than 3 bodies actually issued statements regarding crypto assets. And I think that the problem is that, and Patry also sort of alluded to it, that it is not yet clear that who would actually regulate the crypto assets, or who is better placed to regulate crypto assets, or under the existing, for example, legal framework, the crypto assets falls in the ambit of which regulatory authority. For example, in case of United States, FinCEN characterizes crypto assets as money service business and requires that they report suspicious transaction to FinCEN. US Treasury, on the other hand, treats crypto assets as convertible decentralized virtual currency, whereas CTFC, that is Commodity Future Trading Corporation, they treat crypto assets as a commodity. On the right-hand side is the statements that have been issued by the authorities. So, in 40% of the case, central banks were the first one to issue statements on crypto assets. In 17% of the cases, financial supervisory bodies or the government departments issued statements about crypto assets. So the point that I'm trying to make is that there is a lot of uncertainty and confusion about who is responsible or who would be responsible for supervising crypto assets. Now, what has so far been the regulatory response? Patry, of course, showed many pieces of information which shows that the regulators are increasingly sort of recognizing crypto assets, and the acceptability is perhaps increased. But if you look at the position, it's not really that sort of encouraging as far as the supervisory regimes are concerned. So, as per this study, in 45% of the jurisdictions, crypto assets are unregulated. In 36% of the jurisdiction, there is no mention of crypto assets. So it actually makes it 81%, and 9% of the jurisdictions actually restrict crypto assets or operations in crypto assets in their economy. So that makes about 90%. There are only 10% of the jurisdictions that have come out with some sort of regulatory framework or guidelines for crypto assets. And in 5% of the cases, the jurisdictions use bespoke regime, whereby there is a regime that actually also covers crypto assets. And in 5%, there are other types of regulatory treatment that has been meted out to crypto assets. Now, if we go about supervising supervising crypto assets, this is the ecosystem that we will have to take into account. So first of all, we will have to decide that what would be the nature and form of these crypto assets that we are going to supervise. Until and unless we define in a reasonably certain manner what are the crypto assets and what are the crypto assets that a jurisdiction will supervise, it would be actually difficult to take the first step. Second is that what components of the ecosystem a jurisdiction will supervise. As Petri also pointed out, that there are only parts of this ecosystem that are being sort of not regulated, but where supervisors are showing more acceptability. So for example, custodial services. And I understand, as Petri also pointed out, that custodial services are very important piece in this overall puzzle. So do we, for example, supervise the creation of digital asset, of these virtual assets? Do we also regulate the initial distribution, ICOs, or initial distribution of other crypto assets, or do we only supervise secondary trading? And most of the jurisdiction, as I will show in one of the next slide, are as of now concentrating on the crypto assets exchanges, because that is relatively easy to supervise. And then do we also supervise the type of intermediaries that are providing relevant related services about the crypto assets? Now, the challenge is, how do you actually regulate something that is sort of born to be unregulated? The very structure of the crypto assets, or at least the cryptocurrencies, like for example Bitcoins, make it really very challenging to come up with an appropriate regulatory regime. And as I tried to actually convey, I'm not sure whether I was able to convey or not, but the important thing is that supervision in itself is actually it is actually a means to some objective or some goal. So it is important that if, for example, we decide to supervise crypto assets, whether we will be able to achieve the supervisory objective, that, for example, can be consumer protection, or that can be, for example, safety and soundness of the system. Lack of clear terminology and classification, as I mentioned, that different jurisdictions have defined crypto assets differently, and many jurisdictions have yet not even attempted to do so because of the complications and complexities involved in it. Crypto assets data availability and quality. The data in most of the cases is either not available, or where available, its quality is poor and it cannot be verified and re-verified. Now, as I earlier explained, that the supervisors have mainly focused on crypto exchange activities. Reason being is it is relatively an easier sort of part of the crypto assets eco framework that can be supervised, because you know, for example, who is running the exchange, you know, for example, that who can actually who is trading on the exchange. But beyond those exchanges, because the people holding these crypto assets, in most of the cases, they can freely transfer those crypto assets to one another, it actually becomes very difficult to supervise the whole ecosystem. And I'm not yet sure, of course, that whether it is a good idea to supervise the whole ecosystem, or whether supervisors should concentrate only on certain component of the crypto assets. Then there is a huge possibility of regulatory arbitrage, as I just mentioned in few slides back, that on average, in each jurisdiction, 3 different bodies actually came up with statement about these crypto assets. So there would be a lot of overlaps, and there would be a lot of gaps between the regulatory jurisdictions, and that would of course expose regulators to regulatory arbitrage. And then in addition to that, there are hybrid tokens, the tokens that have characteristics of a security like equity or debt instrument, of payments. So it actually makes it more complicated. In addition to that, one important thing that is not mentioned in this slide, but that Patry alluded to, is the cross-border supervision. Cross-border supervision as of now, even for financial institutions that operate in more than one jurisdiction, is a very complicated area. And for that, the supervisors have to actually interact and coordinate with each other very closely. Each year, supervisors hold supervisory colleges to inform each other about the state of affairs of a particular institution that is operating cross-border to each other. So for an ecosystem that is actually spans across the globe, it would actually be very difficult to come up with standards for cross-border supervision. AML KYC would a major risk, and it would actually be very difficult to address it. And Patry also showed that the FATF guidelines, so FATF requires that the crypto assets should be regulated as jurisdictions supervise financial institutions. Now there is of course a proportionality standard that the risk parameters and standards should be applied proportionately. Smaller institutions should of course be exposed to relatively less stringent requirement, but having said that, AML and CFT would remain a major area of concern for supervisors once they start regulated. For a developing economy like Pakistan, for example, there are additional challenges. So the first is with free capital flows. Unlike developed economies that are capital convertible, most of the developing jurisdictions, they have certain controls in place, both for inflows as well as outflows of capital. But in the design of most of the crypto assets, actually the transfer from one jurisdiction to another jurisdiction actually takes place without those checks and balances. And that actually is a positive thing as well, because that makes crypto assets ideal mode for example for remittances. And that is one of the reasons also that we feel that it can play a very positive role in the financial inclusion. But well, then this is also a challenge that how to actually address the capital flows. Effectiveness of law enforcement agencies. Once the supervisors decide to regulate crypto assets, then of course the players that remain engaged in this ecosystem without authorization or permission from the supervisor, those will have to be taken out. And for that, supervisors will require assistance and cooperation of law enforcement agencies, and the resources of the law enforcement agencies and their capacity. That would also be a major challenge for developing countries. Resource constraints of regulators themselves, as Patry also pointed out, that the regulators have lack of understanding, and I feel I don't feel embarrassed in actually acknowledging it. That can be true, but so the resource constraints in the regulated entities actually can also be a big challenge. Somebody actually also has a question that what has been State Bank of Pakistan response. So we issued an advisory in 2018, and similar advisories have been issued, I understand, by many jurisdictions, whereby we sort of informed the general public that if they deal in crypto assets, they will be doing it at their own risk. because there is no consumer protection framework in place, and the entities that are dealing in this space are doing it without any license or authorization from any supervisor. And then we also issued instructions to our regulated institutions that they themselves should not deal in crypto assets, or neither they should facilitate their customer. And the primary reason was AML CFT concern, to which these institutions will be exposed if they start dealing in crypto assets. So thank you very much. I hope that I have not taken more time than was allotted to me. Thank you very much.
Thank you so much, Dr. Inayat, for this wonderful presentation and insights, specifically focused on Pakistan as well, and showing the perspective of our regulators and the challenges facing the regulators and policymakers in this domain. Now, without further ado, I would like to welcome Serene. Serene is actually is the research manager of Labuan IBFC Incorporated, a wholly owned subsidiary of Labuan Financial Services Authority. It is the statutory regulatory authority for Labuan International Business and Financial Center under the purview of the Ministry of Finance, Malaysia. Labuan IBFC Incorporated serves as the jurisdiction's official market development agency. Prior to joining Labuan IBFC Incorporated, she was attached to Labuan FSA for more than 10 years and headed the business policy unit there. Prior hands-on experience as a regulator on policy formulation and international tax compliance has provided Serene a deeper understanding of financial solutions, as well as a solid foundation in the promotion and market development initiatives of Labuan IBFC. And I hope that Serene would be able to share her experience from Labuan IBFC and Malaysia. So over to you, Serene.
Okay. Thank you, Dr. Farrow, for the kind introductions. So let me just share the screen before I start the presentations. Okay. So is it good on the screen?
Yes, I can
see.
Thank you.
Okay, sure. So good evening, so everyone, and thanks to Alif Technology for the invitations to this webinar. So I will take through these presentations with a brief on the regulatory framework for crypto assets and the development in this space, and then zoom into the approach or the approach in Labuan IBFC. But I won't be going through in detail because earlier on, Mr. Patrick and Dr. Inayat has already gone through some of that the developments. Okay. So historically, digital started with fintech. So where the technology actually collapsed the business processes to enhance efficiency. So recently people talks about DeFi, and that aims to democratize and create a new way of financial intermediation that really rely on blockchain and do away with the intermediaries. So we are thinking if DeFi is really acceptable globally one day, really, this may be the future in digital space, and it is about trust and credibility of the system. So generally, if you look at crypto asset, that can be categorized into three broad categories. I'm not categorizing, I'm not putting in the cryptocurrency in this, but it's really mainly a token per se. So basically, it is an asset that leverage on DLT or other similar technologies. So the first is the payment token, just like a stable coins, that like what Patrick is saying, like it's a one-on-one kind of pairing built on a blockchain protocols. So the second is utility tokens that you store in an e-wallet, for example, your A-Miles tokens, your airlines tokens, and you have the final piece is the securities tokens. So this is similar to traditional securities, but has been tokenized or digitalized in this. So regulation may seem to be an unwanted element in the developments of the decentralized community, but it's necessary if such token is to grow and become more widely accepted one day. Okay, so in addition to crypto asset, this is the digital currency that we are talking about. And then there are a lot of different terminologies is really like the regulator is using. So digital currency is really what we can see a lot of development in this space and what countries are looking at. Central bank have started to explore in having their own sovereign digital currency, but yes, this is really kind of like still work in progress and it's not that matured. But somehow rather than we look in China, China has actually started their trial runs for their digital yuan last year in October, and they will have their second trial run this year with twice the number of participants and payout. Okay. So this is the travel rules that Patrice have mentioned earlier. So the G20 Ministry of Finance and Central Bank governors has actually recognized that crypto assets do not really pose material risk to financial stability, but they will raise the issues with respect to investor protections, tax evasion, and most importantly is the money laundering and terrorist financing terrorist issues. So this would include the challenges in tracking the transaction trails, especially when there is no same level playing field. There could be certain operating jurisdiction doesn't have robust AML CFT regulations in place. So yeah, back in 2018, FATF then issued the standards, the travel rules on the virtual asset and virtual asset service providers. So they will require the information to be exchanged and on originator and beneficiaries. Yeah, but that would be a challenge. This is still a challenge for the industry actually. So to put things simple, it's like creating a shift system for digital transactions. It's about the transparency of knowing people behind the transactions. So if this protocol was accepted, virtual asset or digital asset we are saying here might be recognized globally, but then of course a global approach to regulation is really, really important. So it's really a process of the global working together to come out with a standardized regulations in this. Okay, I will then now share the Labuan approach to digital. So just a little bit of introduction where Labuan is for those the participant if they do not know where Labuan is. So Labuan Island is part of Malaysia. So it's located at east of Malaysia. And Labuan is one of the 3 federal territories under the federal government. So the island, basically the island economy was mainly driven by 5 key sectors, including Labuan IBFC. So the whole island is a duty-free island, including the port, and Labuan Port is the port registry for Malaysian International Ship Registration. If we look at the center, Labuan IBFC, Labuan IBFC was set up by the Malaysian government 30 years ago to intermediate cross-border trades and investment in Asia. So you can see more than 70% of our players are really Asian-based. As we are part of Malaysia, we are also part of all the protocols the country adheres to. So this will include the OECD, APG, as well as FATF. We are FATF members. Malaysia is FATF member, including Labuan. So we have never accepted bearer shares and no cash transaction ever been carried out via our banking system. So Labuan, we have our own set of regulatory and supervisory framework in our tax rule. So the jurisdictions governing legislations were passed by the Malaysian Parliament and administered by a sole authority, the Labuan Financial Services Authority. So although we have our own set of law and regulations, Labuan IBFC doesn't have regulatory arbitrage as in the means like the jurisdictions also subscribe to the Malaysia AML CFT requirements, including the international standards and best practices that the country adheres to. Okay, so Labuan IBFC business are predominantly is really wholesale international business. So it's not dealing with retail. So the jurisdiction is currency neutral, where the business dealing can be carried out in any currency of your choice. So this would include like US dollar, or even if you want to carry it with UAE dirham, that is fine. Okay. So I will then share with you the digital approach in Labuan. So for digital finance, our ethos is that we are not taking a sandbox approach. So what we are doing, just like what the earlier presenter has shared, we are really relying on the existing license to facilitate digital players. So meaning that the moment if you are approved and licensed to carry out the business, you are operate in the actual market. So we are seeing technology is as part of the underlying best that embedded into your business processes for the digital business. So Labuan IBFC has a ready digital toolbox. You can run a digital FI, a financial institutions, be a digital service provider, or provide a digital platform for trade or even payments. So all of these are actually licensed and regulated by Labuan FSA. So the regulator really encourage innovative financial services, at the same time also ensuring these businesses are undertaken in a prudent manner and that regulation adheres to global standards. So our licenses are possible to stack in order to create a more efficient business operation. I will share with you what I meant with stacking of the license. Okay. This is the digital snapshot on our digital toolbox. So you can pick and mix the licenses to come out with the ideal business model that you wanted. For an example, if you were to issue your own token and store in a digital wallet, so the token can then be issued and used in exchange of goods and services. So the license that you need to create such services will be the digital token or asset issuance license together with the payment portal approval. So if you are going to have your own payment gateway or otherwise, that is fine. This is what I meant with the stacking of the license. So one thing to highlight here, we only accept an asset-backed token or a utility token and not ICO at the moment. So ICO is not what we are looking at the moment. So I just want to share with you a little bit on the numbers in terms of the digital players in Labuan. So we can see a growth for 2020. So last year we have 34 digital players. And this year, the numbers of players has gone through 61, and majority are crypto exchange, payment portal, and token issuance players. So on digital securities exchange, we have an existing exchange actually prior to Fusang and GSX. So there are these Labuan International Financial Exchange. The exchange was originally is a listing venue for bond, especially for Islamic. And they are now exploring and keen to go for digital too. So for bond issuance on blockchain. So effectively, Labuan is now home to 3 digital securities exchanges. We really encourage digital in Islamic finance, and we are one of the key players in Islamic space. And really, if anyone has good business proposition in digital Islamic finance, we are happy to talk through this further. Okay. This is the regulatory framework for digital in Labuan. So if you look at the left on the governing legislations for the jurisdictions, there are 4 acts highlighted in blue that are related to digital business. So the Labuan Financial Services and Securities Act creates the license. So if you would like to run your business in Sharia compliance form, so the Labuan Islamic Financial Services Securities Act will be the licensing act, meaning that you can run your digital business in either conventional or Sharia compliance operations. So the Labuan Companies Act will provide for the structure setup on tax related that will come under the Labuan Business Activity Tax Act. Is our own tax rules different from onshore Malaysia, but that will be under the purview of the Malaysian Inland Revenue Board and not Labuan FSA. So at the middle, the key digital licenses, these are the licenses that will create the digital business. You can see here, if for digital token or asset issuance, you will be licensed as credit token business. Digital securities dealer will be via a securities licensee license and so on. So on the right, these are the key requirements that the regulator will look at on the entry criteria as well as the ongoing compliance. So first thing is on the fit and proper for sure. So they will look at your expertise and experiences, the ability to run the business, for the business to remain solvent for sustainability, due diligence, the onboarding process or policy for your clients. We recognize eKYC, and you will need to have enhanced CDD for investors from high-risk jurisdictions or political exposure person as part of the AML requirements. So the ongoing process support the gatekeeping roles in preventing those illegal trading activities, for example, the money laundering. Internal policies, you must have that as part of the governance. For an example, if you are running a business of a crypto assets, you will need to be sure and ensure transparency. There is no hidden cost, how you want to ensure investor protections. On client asset management, really, this is how the assets are being held and safeguarded. There could be a segregations of account on the process of clients' money withdrawal, etc. On cyber risk management, because everything now is on technology or blockchain based, so you need a policy or internal policy on how you want to address cyber securities. Governance and conducts is really how you want to ensure fair dealing, investor protections. So this is basically a very brief example based on the earlier slide on the how regulators are assessed and how you want to apply it for the license. For crypto asset issuance, like what I mentioned, is really a token. It's not a cryptocurrency. It's not really a currency per se that we are saying, but it's a medium or can be a medium of exchange for goods and services. So we are not encouraging ICO, and it's really asset-backed token. You will need a white paper for sure, and the regulator will assess the applicant at minimum as per the requirements I shared in the earlier slide. So of course, paid up capital is one of the criteria that we are looking at. For you to avail to this Labuan tax framework, you will need to demonstrate that you have economic substance in Labuan Island. So this is the OECD requirements, or even in EU is the EU COCG requirements for substance requirements to have if you're offering a preferential tax rate. So to highlight, you need to have your presence in Labuan Island for your operational or your management office. You can also have your marketing presence in any part of Malaysia. So it's not really in the island itself, but you can have your presence in Malaysia. Basically, the approving process will take 21 working days, and fast track is possible. And I just want to share with you latest development in Labuan. So last month in December, the regulator has issued a guidance on the entry requirements for the digital banking applications. So same thing, there are 4 key areas that the regulators are looking at. A viable business plan and sustainable strategy is important, supported by a capable and competent management that run the business, fit and proper internal governance and risk management. ML policy, of course, cannot be compromised. So a robust technology platform will also be one of the areas that the regulator will be look at. And because we are dealing in a wholesale market and we are non-commercial for Labuan IBFC Inc., we are able to facilitate your licensing applications and take you through on the feasibility of your business plan if you are interested to apply for a digital banking license or even via a credit token issuance license. Okay, to take things simple, so I'm just summarizing the advantages if you were to use Labuan. And in short, is really Labuan tax and currency neutrality as well as the cost efficiency will create an ideal base for borderless digital entities. So most important, I just wanted to mention that even though there is a flexibilities on a facilitative regulator, you actually operate in a robust regulatory and supervisory regime. Okay, thank you. I think that's all for me. Thanks.
Thank you so much, Serene. Really appreciate it. And now we have moved to our Q&A session and panel discussion. I think that the participants have been anxiously waiting for this session. And I thank Petri, during this time, he utilized his time for answering some of the questions already. So that is very good. And we have a lot of questions actually, by the way. So I don't know how I would be able to manage all those, but I will try my best basically to be precise in questions also. And I would like basically all the panelists, because the thing is that all the questions are actually, most of them are open. So feel free, I would like to request all the panelists to feel free to hop in and give your opinion and view on the questions and respond accordingly. Thank you so much. So I will just, without further ado, I will just move to my first question. Is how do you think that the security can be improved by regulating crypto assets? So if I can ask Dr. Inayat first.
Sorry, Farooq, I missed the question. Can you please repeat it?
So it's like how security, I think that it is about financial security. So like how financial security can be improved by regulating crypto assets. Like, is there a clear formula for that?
So what do you mean by financial security? I'm sorry,
I think the question in myself was also very general and vague, but the way I see it is that if let's suppose that do you think that crypto assets have to be regulated because otherwise they will pose a threat to the financial stability and cybersecurity. I think that that is what is meant.
Okay, thank you. So as far as financial stability is concerned, no, I don't think so that they actually pose any risk to the financial stability. And I think there was also in one of the presentation, it was mentioned that G20 countries assessment is more or less the same, that they don't pose any risk to the financial stability. And the reason is that their size as of now, although it is increasing very substantially, because for example, Bitcoin value has increased very substantially. So the result is that their market cap has increased many fold, but still because their size is a very small percentage of the overall financial sector, that regulated financial sector. So in terms of financial stability, there is no risk. The major risk is in terms of AML CFT, because these crypto assets can be transferred freely, and since they are not being regulated by jurisdiction, that actually risk increases. And that is, I think, one of the reasons that now why FATF is now requiring the jurisdiction that they should start regulating it. Now, I'm not sure that how many jurisdictions decide to regulate crypto assets and how many jurisdictions decide to simply ban them. But simply ban crypto assets would again won't be a simple and straightforward solution. The reason being that you can ban them, but if they still continue to operate in black market or gray market, then the risk would still be there.
Okay, perfect. Then I would like to ask Petri. It's a question that that how well crypto assets can function as a medium of exchange, especially at retail level. So mainly because settlement delays due to the consensus mechanism are there, so they are the biggest concern. So would you like to comment on that?
Yeah, sure. I mean, I can maybe just give a comment on the previous question quickly. I think where you actually see the value in regulations for the security is mostly when you see headlines where, you know, there's a big Bitcoin hack or, you know, someone's lost assets. A lot of those hacks happen at the exchange or at the custodian level. So Mt. Gox is the perfect example when you actually read up about that and how those guys were managing it, there was a very big security risk there. So when you start getting regulations in, especially at those levels, you're going to see more security. And if they're regulated, I mean, the company itself is going to be more focused on security. So I think that's where it actually secures the entire industry. Because if you've got your own wallet, I mean, that's your own responsibility, similar to having your wallet in your back pocket. But at an exchange or custodian, you want some regulations to trust them and be able to rely on them. To get to your actual question around the delays, I think that's one thing that a lot of people stare into, especially with Bitcoin. So Bitcoin works that a block is mined every 10 minutes and your transaction will only go through in 10 minutes time. But Bitcoin, I think, is going to become more of your gold standard. So when you're buying a coffee, you're not buying it with a few flakes of gold. That's just not practical to do. But there are many other currencies. So if you start looking at Ethereum and you're looking at some of the stable coins running on Ethereum, the confirmation times on there are much quicker. So in terms of remittance and payments, etc., using other blockchains is going to be a better solution if you're trying to buy a coffee, do a retail transaction or something like that. So I think we will see this entire ecosystem come out where Bitcoin is probably not going to be the currency that you use to buy coffees and do transactions online. It'll be what you use as a reserve currency or something that you do very big payments in. and you'll have other currencies potentially linked to the dollar, potentially currencies that are standalone with a basket backing them that are being used for those remittances, the very quick payments.
Mm-hmm. Okay, perfect. I have one question to Serene. That can you tell us which are the biggest, or you can say the most famous central banks which are keenly looking into regulating crypto assets or cryptocurrencies? There is one question actually. So yeah.
Okay, so if you look at crypto assets, if you said central bank per se, to be honest, I'm unsure on this, and really, this is really if you want to come out with a sovereign kind of cryptocurrency or digital currency. So really what you can see now, I knew that, yeah, PBOC, China is doing that. And then in terms of offshore jurisdiction, if I'm not mistaken, I think even Malta and Bermuda is trying to explore, but it's really like everyone is saying that they will be exploring and looking at it, and then how soon that will be launched or how soon that will be used, that one we are unsure. Yeah.
Mm-hmm. Okay. Now I have a question to Dr. Inayat, which is I think right now very famous, although also in the news, that very specific to Pakistan, by the way, that can you share your views on recent rulings of Sindh High Court allowing a certain person for crypto mining in a farm in Pakistan itself? And also please share your views on recent parliament approval by KPK, which is a province in Pakistan, to allow crypto mining farms in the province. Thank you.
Gee, thank you very much, Dr. Farrow. I think it's a complicated proposition as I just explained. From our perspective as a central bank, and I think there was a question as well, that how supervisors can regulate cryptocurrencies when they don't have a mandate to do that. And that was one of the reasons that why we have not actually banned cryptocurrencies in Pakistan. The only thing we did was to inform the general public that State Bank of Pakistan or Security and Exchange Commission of Pakistan are not regulating crypto assets. And the only thing we did was to ask our regulated entities that they should not be dealing with crypto assets. The reason being, we thought that if they do so, there would be substantial AML CFT risk, and the existing frameworks or systems or processes that these institutions have, those actually do not cover the risk that arising from those crypto assets transactions. I think as I said, that situation is still evolving, as Petri also explained in his presentation, and we will see that how it will go about that. In fact, there are a number of other jurisdictions as well that have decided to promote mining in their jurisdiction, because they feel that can bring about substantial investment in their countries. So I think we are yet at the sort of very start, and its implications would unfold in time to come.
Mm-hmm. Okay, perfect. Thank you so much for your insights. I would like to ask Petri one question, that most of the time we hear that cryptocurrencies are used in illegal trades and transactions. So do you think there are, I mean, these regulations or laws are basically enacted to basically curb down these illegal transactions and these activities, or how will you stop cryptocurrencies for not being used in such type of transactions? Thank you.
So I think this is a very interesting one, because just given the history with some of the use cases, when the currencies were just developed, a lot of people assume that's sort of one of the main use cases. In reality, using a blockchain for any money laundering or any illegal activity is actually the worst idea you can have, because you've got a perfect record of all transactions. You can trace everything and see exactly what's happened. So we've seen quite a few prosecutions where people have very successfully been prosecuted based on those results. A good example is if I steal some currency, I always want to try and bring that back to fiat currency. And I'm probably going to send that to an exchange. And on the blockchain, a lot of these exchanges are already tagged. So you can see the moment that those funds flow into an exchange wallet, and you can contact that exchange, get the funds frozen, find out what KYC details, etc., is linked to that specific wallet. So actually doing fraud on blockchains is not a very good idea. And what you've also seen is, I think Chainalysis, CipherTrace, a few of them have done analysis of what value in total value is actually linked to these kinds of transactions. And it's a very, very small percentage, especially if you start comparing it to the traditional fiat system. If you just look at some of the money laundering fines that have been issued in the last 5 years. I don't know exact numbers, but I think in the last 2 years, the fines issued to big banks were larger than the market cap of Bitcoin was in the middle of last year. So I think that's a misperception. And for anyone doing fraud, it's not a very good idea. One last example is you saw the NIM hack probably 2 years ago. And what happened there is they started tagging the addresses. So as the hacker started sending the funds, all those addresses got a tag that says these are stolen funds, and they can't transfer it. And it was actually very funny to watch because these guys got desperate. They were sending $5 and $2 transactions trying to move the funds, but they couldn't do it because everything was being identified. So I think there are actually very good solutions around that.
Perfect. Thank you so much. I would like to ask Serene one question that is there any tax treatment on gains and losses for crypto assets in Labuan or something or in other jurisdiction?
Okay. For Labuan, okay. Normally when you talk about first thing first is like how you want to price the crypto assets and how you want to look at the fungibilities of the, okay, so for example, let's say in the case of Labuan, now you have a token pegged with a US dollar. So the value will actually really appreciate or depreciates similar to the US dollar or any currency that you tag along. So if let's say you are a token per se in exchange of a goods or a services, so it will be really depending on what is the pegging, what is the pairings of the currency, of the value of the assets. And from there, then you will then determine how much is the losses, how much is the gain. If you set taxes in Labuan, so let's say any gains from that is the gains from that asset, so that will be taxed in Labuan. So Labuan tax is 3%. So if you say the value, how you wanna see the value of the asset is really depending on the asset behind it. So I couldn't really say like how much is it. So it's really like it will appreciate or depreciates, or the value is depending on the currency, the asset behind it backed by the currency.
Okay. Perfect. I would like to ask Dr. Inayat one interesting questions that if let's suppose in future the use of crypto assets and cryptocurrencies increases, so will it have any impact on national currencies or the monetary policy of a national sovereign? And how do you see, what is your view basically on this?
Well, there have been actually a few research papers on this particular subject, that how monetary policy will be conducted when these cryptocurrencies actually becomes sort of the mainstay. Now, as far as the cryptocurrencies, the central bank digital currencies, CBDC that we call, and Serene, I understand she also referred to China and a number of other jurisdictions that are experimenting with that. CBDC, because CBDC would actually be a central bank currency, and the central bank would exactly know, for example, how much money is in circulation. So that won't have actually, I mean, the monetary policy would more or less be conducted in the same manner that is as it is being conducted as of now. But if other virtual currencies, decentralized virtual currencies actually increase very substantially, and then they start having an impact on the circulation of the national currency, then it would be a major issue. But as of now, it is not the situation. And I think that while it is being acknowledged that if these decentralized currency circulation increase very substantially, that would have an impact on the national currency. I don't see any tools as of now available, but as the circulation starts increasing, I understand that the economists will come up with appropriate tools.
Okay, perfect. Thank you so much. Petri, what do you think about the conversion and the use of crypto assets in a multi-jurisdiction environment? So like you touched in your presentation about a global environment where one jurisdiction is facing difficulty, that what are the touch points where they can regulate a crypto asset or a transaction. So what do you think that how this problem can be tackled? And how do you foresee in the future that how it will work smoothly or seamlessly in a global environment?
Yep, I think that is the probably $1 trillion question in terms of how exactly do you regulate these things across the world. I think the approach that we've taken so far of regulating specific touch points is very good. I mean, most normal individuals are not going to do a wallet-to-wallet transaction. They'll be using a custodian, they'll use an exchange. When banks start doing custody, they'll send it to their bank. That's just what they're used to. Also, if you're thinking about just cross-border payments, my mom is not going to use a crypto wallet at this point. It is still, you need to understand the technology to really be comfortable with it. So your average user is probably going to use a hosted solution where someone else is managing the private key for you and you're just using it. So for cross-border payments, I think that's a good start. And then from there, it's going to start looking at decentralized finance, start looking at wallets, etc., and those peer-to-peer transactions. And I think that's where you're going to need a lot of conversation between industry and the regulator to make sure they really understand, and both parties understand, what the goals are of the one and what the practical implications of those goals are. So I think that's where you're going to have to see a lot of working together, where big work groups that are out there at the moment are already starting to think about these issues, but that's not a quick or easy solution.
Okay, perfect. Thank you. So Serene, I would like to ask one question, is that is the traditional laws, do you see that they are in place, but in different countries, can they make the virtual currency as illegal? Do you think that most of and traditional laws have to be improved in that sense that they can accommodate such phenomena?
So I just want to get, just to understand your question. So you are saying that whether the laws have to be improved to cater for this business, the digital business,
yeah.
All right?
And do you think that is this work is a lot or some tweaks are good enough?
Okay, so yeah, really this is the space that is really new. So if you look at a traditional kind, okay, for example, if you set a securities, you have a securities features for a crypto assets. So normally what most of the jurisdiction, what they are doing, they are relying on their Securities Act. So the underlying of it is the securities in features. So because you are pegged with a securities. So that is how they did it. But in the case of, let's say you are saying a currency per se, that is a national thing, and I don't think it's as simple as you will then change the law. Is the practicality of it, how you want to do it, and really a consultations like what Patrick had been mentioned always, the consultations or regulations that work on together with the industry and the regulator is really, really important in this sense. So if you said how much effort you need to improvise the law or legislations, I think, yeah, there would be a lot, because it's not only how you want to regulate, there's a lot of other angles that you have to look at, what components or what areas you want to regulate, and then whether there is a ancillary or subsequent areas that you have to really not only when you regulate, it's not only on the assets or the business itself, but it's the conducts of the intermediaries as well. So it's the ecosystem that you have to look at as a whole. Yeah.
Okay, perfect. Thank you so much. Dr. Inayat, I would like to have your comment on the applicability of existing international standards on regulations, actually, are they applicable on crypto assets? And are you aware of any international bodies working on in this space or in this field, actually? Thanks.
Okay, thank you, Dr. Farrow. I think there was a question on whether there is an IFRS on crypto assets or not. Frankly speaking, I'm not really sure. Perhaps I think Patrick, being a professional accountant, would be better placed to answer that. My own understanding is that as of now, the crypto assets, if they are, for example, on the balance sheet of an entity, the accountant would try to value the assets as per their own judgment. Actually, valuation of crypto assets is a major issue. How do you value, for example, Bitcoin? A financial asset, generally there are, I mean, 3 or 4 acceptable ways to value a financial asset. Most common is actually the discounted cash flow based method, whereby you discount the future cash flows that you will obtain from that particular financial asset. There have been, of course, a number of novel approaches to value fintechs and telcos and these sort of new technology-oriented firms. But so far, at least I am not aware of any valuation model for virtual currencies, like, for example, Bitcoin. So I'm not sure that whether there is a separate accounting standard for the valuation of crypto assets. Sorry.
Okay, perfect. Patrick, would you like to have some comments on that?
Yep, sure. So I've actually dealt with this challenge quite a lot. I think what you end up doing is you're taking the traditional standards, so IFRS and US GAAP, and you're applying them to these assets, where you've got a highly liquid, very frequently traded asset like Bitcoin. You can start applying a principal market assessment, where you identify a principal market, and then you price that asset based on that principal market. So you can look at the traditional standards and say, when I'm pricing something, what are the standards? How do I identify it? What is defined as a market? I need to do research on that market. Can I trust the volumes, etc., on that market? Identify it and then use that for pricing. But this is purely pricing, if I can put it that way. So this is not saying the value of Bitcoin or the future potential value of Bitcoin is X. Doing that calculation is very difficult. This is literally, if you're looking at financial statements and you have to price it as at 31 December, if that's your year end, this is the best way to use it. The other challenge over here is also in IFRS. I mean, currently digital assets are seen as an intangible asset, and the accounting for that isn't always exactly the same as how you're using it. So for intangible assets, you have to assess for impairment annually and look at that, where you're not doing revaluations through the income statement, similar to what you might be doing if you're trading in it. US GAAP have some specific areas where you can account for it more in line with how people are using it. But I think this is also one of those areas where you're going to see development. I know the AICPA, they've got new guidance on audits, sort of SOC type audits for blockchains. There's a lot of work being done on these assets. And as this happens, we'll see maturity. I think we'll eventually see unique standards for these types of assets, especially decentralized finance. I've looked at some of these centralized finance applications, and they don't fit neatly into any of the boxes in the traditional standards. So it's very new challenges, and I'm sure the people writing the standards are going to start dealing with them and give some guidance.
Okay, perfect. Thank you so much. Serene, I have a question for you. That have you issued any license for crypto or for crypto assets or blockchain projects which are Sharia compliant as well?
Okay. At the moment, no, we don't have any. In fact, we are encouraged. That's why I'm keep saying like we are open. If let's say you have a good business propositions for Islamic finance, yeah, we are welcome, and then we are happy to take you through. Yeah, at the moment, no, we don't have, unfortunately.
Okay, perfect. Thank you so much. I have so many questions actually for Dr. Inayat. But I think that the overall gist of those questions is that is there any regulations coming up from SBP for crypto assets or crypto regulations? And I believe that you also mentioned in your presentation, I mean in your comments actually, not in presentation, that the easiest institutions or the easiest way of applying regulations is to basically regulate the exchanges, crypto exchanges. So do you think that the SBP is seriously looking into this proposal, and when we will expect actually for the regulations to be rolled out?
So as of now, no, we are not looking at regulating crypto exchanges. Actually, we don't have a mandate to do that under our existing legal framework. Our legal framework actually mandate us only to regulate banks, commercial banks, Islamic banks, development financial institutions, DFIs, exchange companies, and e-money issuers, payment system operators, and payment system providers. So I understand that if, for example, it is decided that these exchanges should be regulated, then there would be some legal amendments, and then we will see that whether it is Security and Exchange Commission of Pakistan, because exchanges traditionally are regulated by Securities Commission, or whether because exchanges these are like more related with money, should they fall under the purview of State Bank of Pakistan. But I think it is, as of now, to me at least, it seems relatively premature. I think the most probably the road that I see going ahead is more dialogue with the industry, better understanding on our part as to how, for example, these systems operate, how they are evolving, and I think some effort on the part of the industry players to come up with mechanisms whereby the concerns of the regulators can be addressed. So that's how I think that it's going forward. That's the situation I see evolving.
Okay, perfect. Thank you. Petri, I have a question for you that why one needs crypto assets when one can actually do all the transaction through legal tender? So do you think that crypto assets can offer a value addition over there, and how it is?
Yep.
Thank you.
So, I mean, some of the easy answers to that question is just some of the benefits that people always talk about. So the speed in terms of what transactions happen, the cost, etc., the fact that you don't have any intermediaries in between. I'm sending a wire from the US and I'm sending it to Asia. That's hitting 2 or 3 intermediaries in between. Each one of them is taking a cut, and that wire is probably going to take 2 days, depending, how I'm sending, etc. So those are some of the very basic benefits. The other side of it, if you're starting to look at Bitcoin, for example, where that is completely separate from any specific government. So your assets aren't linked to any one government. So whoever is in power there doesn't have an impact on your net worth in the end. So if the government in power does something wrong, it can potentially impact your net worth internationally very significantly. If they, for example, print an excessive amount of money or do something like that. So with those currencies, I think the pure transactional security, all those kinds of things are very valuable. And then when you start looking more at a monetary policy where you are independent of any government, that's also very valuable.
Mm-hmm. Okay, thank you so much. I would like to ask Serene one question. There was one now, it's difficult to find for me here, but the question was that, do you think that when you are regulating crypto assets, even if we take an example of Labuan, that how they are doing licensing, but do you still think that these crypto assets can be used by fraudsters, scammers? Because in fact, like personally speaking, I daily receive emails from various people saying that, okay, please give us your money and then we will double it up, or like we will give you 10x return in 1 month or something like that. So do you think that these sort of activities can be regulated?
Okay, so in the case of Labuan, really when people come and apply to, I'm sharing with you the experience in Labuan. So when people come and apply for a crypto asset, issuance of a crypto assets, and that will be in exchange for just as simple as a utility token. So in exchange for a good of services offered by the group, for example. So we are saying that, like you said, because we are unsure, we just wanted to put a little bit a higher level of securities. So we are saying that as part of the governance, you must have in reserve the same value as the tokens that you are issued. At the moment, this is what we can see. Say, for example, if you issued a token of 10 million, and you can in exchange for a goods for 10 million values of worth of goods. So you must have the worth of the reserve into your bank to that asset. Why we are doing so? Because in the case, if let's say you have a failure of business, or your investor cannot find the fungibility to encash that token become a fiat currency, you being the license or the issuers, you are responsible to actually to encash that into a fiat currency. So that is one of the protections that we provide for the investors. So if you say whether the investor should invest in a crypto asset, is really depending on the risk appetite on you, to what extent you can accept the loss or anything. So of course, we also receive a lot of complaints or events like emails from investors saying that this license holder is doing this, doing that. But we have to really make sure the investor, first thing, as part of the transparency and disclosure at the first place, you must make sure that the investor understand the risk that they are exposed to. So that is very, very much important. And really, like what we are saying, the supervisions, the supervisory, the regulatory framework will be the conducts of the intermediaries. And this is where we are saying that the integrity, the investor protections, the conduct is very, very important. Yeah.
Okay, perfect. Thank you. I think that I will go with the one last round of questions and then we will conclude our session. So then I have one question for Dr. Inayat first. Imagine that, okay, I'm taking you in the future, that imagine Pakistani rupiah is being offered on blockchain. So it's being tokenized. So do you think that can central banks, governments issue such assets, and what would be the challenges? So it's not about the existing private currency issuances or crypto assets issuances. It's rather about central banks' digital currency.
Yeah, I understand. So yeah, actually, central bank digital currency holds a lot of potential, and the reason being that it actually offers the flexibility of crypto assets, and at the same time it offers you the better control, perhaps better security from the perspective of the supervisors. And I think that some of the supervisors, that's one of the reasons that why some of the supervisors are very actively working on that, China being one of them. I understand there have been sort of projects or experiments in Canada, in number of jurisdictions. But a very recent study by IMF actually released just few days back. They pointed out that about 2/3 of the jurisdictions, and I think they had information from about 134 or 114 jurisdictions. 2/3 of the jurisdictions, they don't have the legal backing to issue central bank digital currency. And the remaining 1/3 that have, they felt that still those legal provisions will have to be stretched. So most probably there would be amendments in the legislation, and there would be a whole sort of ecosystem evolving those CBDCs. But I actually see far more potential in CBDCs rather than other virtual currencies. Actually, I was just uh, uh, sort of thinking when Petri mentioned that the virtual assets, they offer speed. There is no intermediary involved, so those can be transferred from one person to another person without intermediaries. They are so safer since no government can actually control those assets. Now the problem is that those are the very sort of essential features of the crypto asset that make it difficult or challenging for the supervisors to regulate. And we, for example, also know that what happened with the Facebook digital currency, the AML CFT implications across the globe, because it was going to be sort of a global currency. So the AMCFT implications by the regulators across the world actually sort of put a stop to that, as of now at least.
Okay, thank you. A quick question to Petri. You mentioned about industry and regulators collaboration, and then that could be a way forward in terms of making crypto assets more useful and more formalized in an economy. So, but do you think that there is a role should be played by the government, and what government can do in this basically in this phenomena? Of course, like we understand, like industry and regulators, but governments can play their role or no?
Yes, I mean, the governments are going to write the laws, etc. They'll be working on that. And I think most governments have a very good consultation process in place. So I think that's one of the most important things, is to have a formalized consultation process in place, get industry to give an input and help them out. And then what you'll see as well is in quite a few situations, industry is already working on solutions that governments can then look at. The cryptocurrency security standard is one such standard for custodians, for example. So a government could easily look at something like that, get some pointers, and then use that when they're busy writing out laws and regulations. And then for the regulator on the other side, it becomes, how do you effectively regulate it? Because you'll have your laws, but the regulator needs to implement them and actually regulate them. And I think that's also where it's very important to work with industry, because a regulator might be trying to regulate something in a traditional manner where there are easier or better ways to do it. Just given the public nature of blockchains, if you pull some of that data, you can actually do some live monitoring. You don't have to wait and request data, etc. So getting that data, I mean, there are very good ways to do that. So I think there's very good solutions if industry and government work together, and it can be beneficial to both. So if a regulator has live data, they're not going to be bothering the industry with, big requests and all those kinds of things all the time. They can, do the monitoring independently, and everyone can work together.
Okay, thank you. So last question to Serene. Is there any similarity or overlapping in crypto assets regulations and digital banking regulations? Or do you think that they are mutually inclusive, that if you are having digital banking regulations, then you have to also have crypto assets regulations, or you can basically have one and skip the other?
Oh, okay. So from the regulations, they could be similarity between both, or they could be some regulations that can be catered for both. But ultimately, they would be different, because digital banking are saying as though as a financial institutions like a bank, that you are providing that banking services to people, and crypto asset is just a products or a mediums of exchange that you are dealing with. Yes, there could be similarity in terms of how you're dealing with the investors, all that, but ultimately the regulations will be different. The details of the regulation will definitely be different. Yeah.
Okay, perfect. Thank you. So I would like to just now, we are coming to the close of our session, and it was very wonderful. But before that, I would like to ask Dr. Inayat to give one final remarks or any thought.
Yeah, thank you very much, Dr. Farrow. So I think the way forward is dialogue between the government, the regulators, and the market players in the space of cryptocurrencies. Uh, there are a lot many people who see a lot of potential. Cryptocurrencies has a lot of potential for remittances. That is very important for a country like Pakistan. It can be, as I earlier explained, it can be a game changer for financial inclusion, because the ease, convenience, and low cost with which these assets can be transferred and can be held. So I think the way forward would be more dialogue, so that the market players, they understand the concerns of regulators, and the regulators, as Petri just pointed out, also appreciate that if there are, for example, better ways to achieve the same objectives, of course, there is no reason to go. If there is a shortcut, why go along? So dialogue, I think that's and collaboration are the two key words going forward. Thank you.
Okay, perfect. Thank you so much. Petri, from your side, what would be the closing remarks or the way forward?
I think the main closing remark would be that this industry has an immense amount of potential. I think we've seen all the interest only in the last year coming into the industry, and it'll be good, beneficial to governments, beneficial to users and to the organizations, for everyone to work together to find the solutions. I think as you legitimize the industry, you'll also see more institutional investors coming in, more different use cases, etc., coming into the industry. So the entire ecosystem grows as everything else grows. So I think that's the main message is, to welcome all parties and grow this entire ecosystem out together, because the benefits are extensive to all parties.
Okay, thank you. Serene, what would be your closing message?
Okay. I really think like digital finance is really a way moving forward for us. I mean, for the entire, because like what we're saying, like if the ecosystem, we need a global regulations which is recognized, so it's easier to regulate these people. Because at first, when it first started, it's really people don't want to be regulated. But when things getting mature, I think slowly people want it to be regulated. It's not for the users, but actually is for them to get more prominence and get the confidence from the investor to invest in it. Just like what we have mentioned earlier, it's like whether when people approach you, whether you want to invest. So if you are being regulated and this is what they want, so people will then feel more confidence in what you are offering. So it's really a ecosystem that we needed that will grow up together, actually together.
Okay, thank you so much. Actually, it was a very wonderful session. Even for me, I have learned a lot and benefited from all the speakers. And I definitely, I believe that the participants have also benefited from your productive session. And just to say that regulations, laws, these are basically like salt. So in the food. So if you put a lot of salt in the food, still you cannot eat. Or if there is no salt in the food, again, then the food would be tasteless. So I think that striking a very complete balance is the challenge, and we all agree that industry is moving forward and becoming more regulated, so that like we can have more confidence from the society and from the economy, and it is actually for the benefits of all, for the whole global society and economy. And again, I'm sorry there are so many hanging questions, but due to time constraint, I am unable to pick them up and ask the questions. But if you feel, please contact me and Alif Technologies so that like we will be able to have another session with the other speakers and also from here as well. So with that, I really would like to thank all the speakers for their time, for their efforts, really much appreciated. And also I would like to thank the participants for being with us and make this in a session very interactive. Thank you so much. Take care. Assalamu alaikum wa rahmatullahi wa barakatuh. Bye.
Thank you.
Thank you very much. All right. Bye.